Well, it's T-minus 45 minutes or so until we get the USDA supply and demand report, and we're joined by Brian Hoops of Midwest Market Solutions in Springfield, Missouri right now. And Brian, it seems like the market activity on the grains, for the most part, at least if you look at corn and soybeans, is getting kind of quiet here heading into that report. I guess that's not totally unexpected, huh?
Yeah, good morning, Marlon. No, it's pretty normal. We go into a report, we kind of consolidate our volume. It really starts to slow down. A lot of people don't want to put on a brand new position just hours before a fundamental changing event like this USDA supply and demand report. Now, I personally don't think this report's going to be a real market mover or a big shocker to the trade. Estimates are for very minimal changes for soybeans, 3 million bushel reduction, and for wheat, a 2 million bushel increase. And corn, 40 million bushel reduction in ending stocks could be pretty sizable. USDA may be very conservative into making changes this month for corn, soybean demand. And as far as South American production goes, they may be very cautious about making changes there as well. So there may be a tendency just to see this report kind of quiet. Of course, the acreage and stocks report at the end of the month should be a big market mover.
Well, we were talking about the corn market weakening up a little bit here today. We have May corn with our quotes provided by bar chart now at $5.44 per bushel. That's down 3 cents. And December new crop corn down 3/4 of a cent at 4.80 3/4. Just not much going on right now. On the soybeans, the May contract down 3/4 of a cent at 14.33 per bushel. And it is basically about 7 cents off of our earlier low this morning, but we're still about 9 cents away from our earlier high. So kind of caught in the middle here. September is up 3/4 of a cent right now at 12.99 3/4. Only one tick from that $13 benchmark there, Brian. November new crop beans down 1.25 pennies right now at 12.53 per bushel. Now, in the wheat market, we were talking earlier in the broadcast about how Chicago wheat was running away this morning. Now, it's more tempered. The May contract now at 6.54 1/4. That would be up 7 3/4 cents on the day. Now it's up 8. It just changed there. That would still put us about 3 cents from our high of the day. And the nearbys are leading the charge on the Chicago wheat today. What's the story on that? Is that related to the weakness in the dollar?
Yeah, you've got a couple things in the wheat today. Weakness in the dollar certainly contributing to strength in Chicago wheat. Limiting the advance for Kansas City was a big improvement in Oklahoma State readings that came out yesterday afternoon. They jumped about 7% in the good to excellent category from the prior week. Kansas was down 1, Texas was down 1, but Oklahoma had a big jump, and that's really limiting the advance for Kansas City as it's trying to follow the lead of Chicago and even Minneapolis outgaining Kansas City this morning.
Yeah, Kansas City had been gaining significantly on that spread between it and Chicago here in recent weeks, but boy, they're widening that out here this week. The May Kansas City wheat right now is quoted at 6.24 per bushel. That is now 2 1/4 cents higher, and July is up 2 1/4 cents as well. Spring wheat trade in Minneapolis, Brian was just mentioning, has May now 4.5 cents higher. We're at 6.46 1/4. July is 4.5 higher at 6.52 3/4. And it sounds, Brian, like pretty good odds of moisture in the plains for the wheat, maybe this coming week as well.
Yeah, that's what we're watching as well down here. Grass is starting to green up, and now we're talking some significant moisture in our area through the weekend and into early next week. And so you've got warm temperatures, a lot of moisture, and that's going to definitely improve the health of the winter wheat crop, at least the stuff that was not damaged from the cold snap occurred a couple weeks ago.
Okay, we'll come back in a moment and take a look at our livestock trade with help from Brian Hoops. And we'll have cattle and hog market activity for you and maybe a look at the Dow as well right after this. Well, we're back talking with Brian Hoops of Midwest Market Solutions, and he is in Springfield, Missouri. Brian, I was talking earlier about the Dow Jones Industrial Average, the futures this morning. Let's take a look at where they are right now. We talked about the dollar being weaker. And the Dow is still up 288 points at 32,064. So it came below 32,000. Now it's back up above it again. Sometimes you have to wonder if there's a correlation between what's going on in the equity markets and some of the livestock trade. For example, through the demand for beef. Well, you have the April live cattle 27 cents higher at 119.62. June, though, unchanged at 119.15. And all the deferred months only about 10 to 17 cents higher, so just kind of a yawn fest here in the live cattle right now. Feeder cattle market, though, boy, they're really getting after it. In the first 3 contract months, they're all over $1 higher. So we have April now up $1.75 at 141.45, make it 177 higher now. And that's $1.80 off of our earlier low of the day. The May is up $1.20, but when you get to August and September, they're a little weaker. What's the deal with that? That's a big spread change there.
Yeah, a lot of spread trade going on in those feeder calves. I think with the moisture that the plains have been getting here recently, it's improving the health of the grass and the pasture conditions. A lot of people wanting to buy some calves, put them on grass for the spring and into the summer months. So we have seen a pickup in demand in that respect. The cash cattle calls this week, probably steady at best. The futures had a good rally yesterday, trying to extend it today, but with bigger show list numbers this week, and the fact that box beef hasn't really responded and rallied along with the futures yesterday, probably going to keep the cash temptations at best, at maybe call them steady, maybe even a little bit weaker this week. But we've been steady in the cash markets for 5 consecutive weeks. It's hard to imagine we'll do that 6 weeks in a row, but it may happen again this week.
I thought I heard somebody mention this morning about a potential production hole or a hole in production here on the feeders. Is that something you're hearing about today?
Well, we've heard that in the live cattle markets, and not so much in the feeders, but definitely in the live cattle as we get through these bigger supplies, and that's at least through the month of early part of April. Then we're going to get into some much tighter supplies, and that's when we could start talking about these holes in the production. And that's why you see June and August holding in there very well, October up near contract highs, all those months trying to anticipate that these supplies are going to get much, much tighter into the second quarter, third, and into the fourth quarters of this year.
All right, so yeah, you can tell that there is kind of a gap in the middle there. Now, looking at the lean hogs, currently you have the April up $1.05 and May $1.32 higher at $91 even. A little more talk about ASF, I guess.
Yeah, there's some real positives from ASF and concerns about what's happening in China with their hog herd. The rebuilding plans are not going as planned, and that's given a lot of strength to these hog markets. But on the other side, you look at some of those futures that you had on the screen. April over $90, and the summer months getting close to 100. There's going to be some hedge pressure as we reach those levels. Those are some very profitable levels for producers to look at.
Well, thanks, Brian. Appreciate it. Brian Hoops, Midwest Market Solutions. Tammy, back to you.